Hearing is now called to order. Good morning, everyone, and thank you for joining us. The hearing will now come to order. Thank you, thank all of you for joining us today for this hearing on Federal Motor Carrier Safety Administration's proposed rule on hours of service and whether it will harm the ability of small business to compete. I would like to extend special thanks to our witnesses for making the trip to the Capitol and taking time out of their schedules to discuss this issue with us here today, especially my constituent, Mr. Paul James, who traveled from Colorado to provide his views on the proposed hours of service rule. In addition to Mr. James, our subcommittee will hear directly from other small businesses about how the proposed rule will harm their industries and the difficulties their firms may face to deliver goods and remain viable. As you know, hours of service trucking regulations are issued by the Federal Motor Carrier Safety Administration at the Department of Transportation, apply to tractor trailers that engage in interstate commerce that exceed 10,000 pounds in weight. These regulations place limits on the amount of time a commercial truck driver can be on the road, which are meant to increase safety and reduce fatigue-related accidents. There has been a significant decline in large truck crashes since the 2003's hours of service rules were implemented. Since then, according to the Department of Transportation's own data, there have been a reduction in fatal truck-related crashes by over 33% and decline of crashes resulting in injury by 40%. During this period, the distance traveled by commercial vehicles increased by some 7 billion miles. Despite these major improvements in driver safety, the FMCSA has now proposed complicated and cumbersome travel requirements for drivers meant to increase truck safety by reducing the daily maximum driving limit, decreasing the maximum on-duty time limit, requiring mandatory breaks, and changing the current 34-hour restart provision. The decreased instances of crashes involving commercial trucks over recent years begs the question, is this new rule really necessary? I find it troubling that the agency relied on outdated truck-related crash figures to justify the need for such provisions, relying on pre-2004 crash-related data to inflate the safety benefits of their proposal rather than using current accident figures. Even more disturbing is that it is estimated that there will be a cost of $2.5 billion annually on the industry if the proposed hours of service regulations are finalized. How are American small businesses expected to survive in this unstable and costly regulatory environment? The trucking industry provides all Americans with much-needed consumer products, food, fuel, and other items on a daily basis that are important in maintaining our national economy. It is critical that changes to regulations pertaining to the transportation of these goods be well thought out and strike the proper balance between the need for safety and a fast and effective transportation system. The failure of the agency to take into account the significant improvements in driver safety over the last 7 years has the potential to not only cost small businesses billions of dollars, but also lead to an increase of new and inexperienced drivers on the road to fill the employment holes created by the proposed rule. I look forward to hearing from our witnesses on the possible implications of the new hours of service proposal. I now recognize the ranking member, Congressman Altmaier, for his opening statement. Mr. Altmaier.
Thank you, Mr. Chairman. This is an example of where most members in a bipartisan way of this committee have exactly the same concerns on this issue. We all recognize that America's trucking industry has an enormous impact on our economy. And according to the Bureau of Transportation Statistics, trucks annually transport 9 billion tons of freight valued at more than $8 trillion. Small business operators are the overwhelming employers in this industry. 95% of the 76,000 firms nationwide have 40 or fewer trucks. In late December 2010, the Federal Motor Carrier Safety Administration issued a proposed rule on hours of service for non-passenger carrying trucks. Proposed changes include reducing maximum driving time from 11 to 10 hours, as we heard, limiting drivers to one 34-hour restart in a 7-day period, requiring periodic 30-minute breaks, and holding drivers to a strict 14-hour operating window regardless of the nature of their work. The Federal Motor Carrier Safety Administration has argued these changes will have minimal impact on the transportation industry while increasing highway safety and reducing casualties. That's what they say. However, to keep up with current demand, reducing drive time limits to 10 hours will require significantly more trucks and drivers on the road. This will force small businesses with scarce capital resources to hire additional drivers and buy new trucks. It's possible in today's economy that some small firms would be forced out of business as a result. Raising the number of trucks would also cause traffic congestion, higher diesel emissions, and greater wear and tear on our nation's highway infrastructure. New on-duty rules will also impact small businesses that rely on drivers to perform additional tasks like loading and unloading cargo after reaching their final destination. Currently, drivers can perform non-driving work beyond the 14-hour driving window. The new proposed rule will require drivers to be released after 14 hours, potentially disrupting delivery schedules and costing employees pay when non-driving schedules exceed 14 hours. In an effort to curb abuse of the 34-hour restart requirement, the proposal will limit drivers to one restart per week. This could impact many small firms that are beholden to weather and other unpredictable schedule changes. These businesses frequently use down periods for driver resets. The proposed rule would end this practice and hinder small businesses during periods when they need their drivers the most. Finally, mandating 30-minute breaks every 7 hours could be unduly burdensome for small businesses. Current rules allow operators flexibility to drive up to 11 hours during the driving window. The proposed rule will force drivers to stop after 7 hours regardless of the schedules and customer demands, eliminating the flexibility that allows many small businesses to succeed. Today in this hearing, we will examine how proposed hours of service rules will affect small businesses and hear from firms that will be impacted by these changes. While the goal of hours of service rules is to improve safety, it is imperative that the new policies take into account economic effects on small trucking businesses. In closing, I want to thank Mr. Rader, who is from my district in western Pennsylvania, for coming to testify today, and all of the witnesses. I look forward to hearing his testimony and the testimonies of the entire panel who have traveled here to offer their insights on this important topic. Thank you all, and look forward to the discussion.
Thank you, Mr. Altmeyer. It is my pleasure to introduce our first witness and my constituent, Paul James, President of Rex Oil Company. Paul has over 20 years of experience in the petroleum distribution business and sits on the ConocoPhillips Lubricant Advisory Council and the Colorado-Wyoming Petroleum Marketers Association Board of Trustees. We appreciate your testimony and thank you again for coming here today. Mr. James.
Good morning, Chairman Kaufman, Ranking Member Altmeyer, and members of the committee. Thank you for the opportunity to testify before you today on the FMCSA's proposed changes to the hours of service regulations. My name is Paul James, and I am the President of Rex Oil Company located in Denver, Colorado. I am speaking on behalf of PMAA, the Petroleum Marketers Association of America. I am one of approximately 8,000 small business petroleum distributors who employ CDL drivers with hazmat endorsements. We transport gasoline, diesel fuel, jet fuel, kerosene, and heating oil to both wholesale and retail customers. Our drivers engage in short-haul, local delivery service from petroleum terminals to intermediate storage tanks, mainly gas stations and other end users. Most stay within a 100-mile air radius or closer to home, and they return home each and every day. I understand that the FMCSA is proposing these changes as a result of lawsuit filed by the truck safety advocates who believe that the current regulations do not adequately address driver fatigue issues. However, petroleum marketers have concerns about the proposed changes, and we appreciate the opportunity to speak to you today. Point number one, PMAA opposes a reduction of the daily maximum driving hours from 11 to 10. Any reduction in the maximum daily driving hours would drive costs up for many small business petroleum transporters. With fewer hours to drive each day, many companies would be forced to hire additional, less experienced drivers or delay deliveries to the following day. In the petroleum marketing industry, product prices change daily. Often it is advantageous from a price point perspective to purchase, pick up, and deliver petroleum products the very same day. It is not uncommon for drivers to experience unexpected delays at petroleum terminals, especially when there is a steep increase in prices for the following day. As a result, drivers often need every hour available under the current hours of service regulations to complete their daily runs. The daily reduction in driving hours would thus decrease overall safety by putting less experienced drivers on the road. If we are forced to hire new, additional people, buy more trucks to deliver the exact same amount of product. Point number 2, PMAA opposes changes to the 34-hour restart period. The FMCSA proposal would place limits on the 34-hour restart period required at the end of the driver's work week before a return to duty is allowed. Specifically, the 34-hour restart provision would introduce 2 nightly periods between the hours of 12 a.m. and 6 a.m. This change would be extremely detrimental to petroleum transporters. For instance, in my case, we have a small window of operating hours to make certain deliveries in order to meet local government restrictions, like in Boulder, Colorado. They grant us access within the city limits only during the proposed time. Rex Oil also schedules several of our drivers during the specific hours of 12 a.m. and 6 a.m. to meet the demand for deliveries, as well as minimizing the daily traffic congestion present in most of our cities. We believe this to be the safest drive time and try to utilize it the best we can. Lastly, this provision would affect those who supply residential heating oil found mainly here on the East Coast. Many times during the winter heating season, drivers are required to respond to emergency calls after their shift is over and often in the middle of the night in order to restart residential furnaces and deliver additional product. Therefore, we would request that no specific time frame be used when calculating the 34-hour restart period found currently in the regulations. Number 3, PMAA opposes the proposed 30-minute driver rest break. Requiring a 30-minute driver break within the first 7 hours of driving time does not result in any noticeable reduction of fatigue among short-haul petroleum drivers. Our drivers are making short local runs between gas stations, farms, and other commercial operations to deliver product in the communities where we live. Which brings me to my last and final point, point number 4. PMAA requests that the FMCSA adopt a provision that would allow time spent by a driver in a parked commercial motor vehicle to count as off-duty time. PMAA makes this request because private short-haul drivers often spend significant periods of time parked in line at terminals as they wait to load product. When fuel is in high demand, a driver wait time may last up to 3 hours. During these extended times, the commercial motor vehicle is parked and the driver remains in the cab. The current rules require drivers to count no driving wait time as on duty. We respectfully request that the FMCSA allow up to 3 hours waiting in a parked commercial motor vehicle to be counted as off-duty time when a driver stays within the 100-mile air radius. The 3-hour allowance would be similar to that the FMCSA already allows under the oil field exemption. PMAA believes that this change can be made without reducing fatigue. In closing, it is essential that the FMCSA take into consideration the differences between short-haul and long-haul drivers. Our drivers return home to home base every single night, and fatigue is thus a less significant factor among short-haul drivers as opposed to the long-haul drivers. We appreciate the opportunity to submit these written comments, and I thank you for your time.
Thank you, Mr. James. Our next witness is Mr. James Berg, owner of James Berg Trucking. Mr. Berg grew his business from a one-truck operation. He began at the age of 19 to a fleet of over 75 trucks and operating primarily throughout the Midwest. We look forward to hearing your testimony, Mr. Berg.
Thank you, Chairman Kaufman, Ranking Member Altmeyer, members of the subcommittee. Thank you for holding today's hearing. My name is Jim Berg, and I'm the president of James Berg Trucking Company, a small business located near Detroit. I started my company in 1984 with one truck at the age of 19. We now employ 75 trucks and employ over 85 people. I personally hold a commercial driver's license and have driven over 1.3 million miles. I am testifying today on behalf of the American Trucking Associations. The proposed hours of service changes, if finalized, would have a profoundly negative impact on small businesses, would restrict productivity, and would result in greater congestion and increased emissions. These impacts are significant since there are more than 500,000 trucking companies in the United States, and according to FMCSA, 99% of these companies are small businesses. The proposed changes come at a time when the pool of qualified drivers has shrunk. Last year, I increased driver compensation by 6% just to attract and retain qualified drivers. If the proposed rules are finalized, I will need to add more trucks and drivers and their corresponding expenses simply to counter the loss in productivity. By my calculations, the hours of service changes would trigger the need to increase our retained earnings by between 20 and 25% just to maintain our current level of financial stability. At some point, companies like mine will need to pass these costs on to consumers, which, as we all know, fuels inflation and reduces global competitiveness. Ironically, increased costs and reduced productivity prohibit me from investing in promising onboard safety-based technologies. Regrettably, my current business strategy must be to hoard cash and delay expansion until the economic and regulatory uncertainties are diminished. With respect to the proposed hours of service regulations, my strong belief is that the agency should abandon its proposal and retain the current HOS regulations. This belief is founded upon the following points. 1. The safety record of the trucking industry has been improved dramatically while operating under the current rules. Since 2003, when the basic framework for the current hours of service regulations was published, the numbers of truck-related injuries and fatalities have both dropped by more than 30% to their lowest levels in recorded history. The proposed changes, number 2, the proposed changes would cause enormous productivity losses. FMCSA previously estimated that changes like the ones proposed would cost society over $2 billion annually. These losses would disproportionately impact small businesses. 3, the proposed changes would have virtually no benefit in terms of reducing fatigue-related truck crashes. Only a small percentage of truck crashes are caused by driver fatigue, and only a very small number of truck crashes occur in the latter hours of drivers' shifts. FMCSA's own cost-benefit analysis acknowledges that the safety benefits of the proposed rules would not outweigh the economic costs. Only by adding creative, questionable health-related benefits does the agency's proposal pass the cost-benefit test. However, as explained in my written testimony, the agency has misrepresented and misapplied the sleep duration and mortality risk studies it relied on in its analysis. Hence, there is simply no scientific support for the health benefits claimed by the agency. 5, ironically, the proposed rules would trigger unintended safety consequences. Drivers feeling pressured to meet tighter restrictions would be more prone to rushing or poor decision-making. The reduction in productivity would drive a need to increase the number of trucks on the road, especially during peak hours of congestion. And finally, the resulting productivity losses would raise demand for inexperienced, more crash-prone drivers. Certain elements of the FMCSA's proposal are particularly troubling. The agency has proposed that drivers utilizing the restart provision be required to ensure that each restart include 2 nighttime periods between midnight and 6 a.m. As a result, drivers using this provision would enter the traffic flow at approximately the same time, further exasperating rush hour congestion and the corresponding consequences. FMCSA's proposal to eliminate the 11th hour of driving simply reflects a lack of understanding over how the 11th hour is used. Even though the 11th hour is not used extensively, eliminating it would not only impact the trips where it is used, but those trips where it might be used. In short, eliminating the 11th hour would only serve to render certain routes impractical or would pressure drivers to make runs in tighter time constraints. In summary, FMCSA's proposed changes to the hours of service rules are unnecessary, unjustified, and would have a profound negative impacts on the economy, particularly on small businesses. I speak on behalf of the American Trucking Associations, companies just like mine, and the 99% of the trucking industry's over 500,000 motor carriers, which are classified as small businesses. In our view, the only rational and reasonable course of action for the FMCSA is to abandon this proposal, retain the current hours of service regulations, and spend its resources better enforcing the current rules. Before closing, I want to thank Chairman Graves and Congressman Bill Schuster for their leadership on this critical issue. I want to thank all of you who joined them in writing Transportation Secretary LaHood to urge him to keep the current hours of service rules in place. Thank you again for your time, and I am pleased to answer your questions. I owe you 24 seconds.
Thank you, Mr. Berg. I will now yield to the ranking member, Altmaier, Congressman Altmaier, who will introduce his constituent.
Thank you, Mr. Chairman, and it is my pleasure to introduce Rusty Rader, the CFO and part owner of J.J. Kennedy, Inc., a family-owned ready-mix concrete business headquartered in Farm Bell, Pennsylvania. Rusty is a graduate of Penn State University and has a master's degree in civil engineering. Prior to joining the family business in 1994, he was employed as a transportation engineer in Chicago. Since his return to J.J. Kennedy, Inc., Rusty has worked to expand the business from a 2-plant local operation to 6 plants located throughout western Pennsylvania. And most relevant to this hearing today, Rusty was integral in implementing technology that has allowed J.J. Kennedy to become more productive ready-mix concrete supplier. The technology that he has applied has given J.J. Kennedy the ability to accurately track the amount of time an employee spends driving versus pouring a load of concrete. This has allowed the company to provide more accurate scheduling of their mixer fleet, ultimately providing their customers with more consistent service. We look forward to hearing your testimony. Welcome, Mr. Rader.
Thank you, Congressman Altmaier, Chairman Kaufman, and other members of the committee. Thanks for this opportunity to share my views on the proposed hours of service regulations currently being promulgated by the FMCSA. My name is Rusty Rader, and I am a co-owner of J.J. Kennedy, Incorporated, a family-owned ready-mix concrete company based out of Farm Bell, Pennsylvania. J.J. Kennedy was founded in 1905 and currently employs 65 people. We operate 6 ready-mix concrete plants with 32...
Mr. Rader, could you pull your mic a little bit closer to yourself? Sorry about
In
that.
his defense, it does say do not touch microphone. Rule follower.
We operate 6 ready-mix concrete plants with 32 concrete mixers and deliver nearly 100,000 cubic yards of concrete annually. The current hours of service regulations are not perfect. However, they are manageable and much more flexible for operations such as the ready-mix concrete industry than the new hours of service rule being proposed by the FMCSA. J.J. Kennedy, Incorporated, as well as the ready-mix concrete industry, take issue with a number of the proposed changes, specifically the following 6 points. Number 1, requiring off-duty time immediately following the end of the driving window. Never before has the FMCSA limited the on-duty time in which a driver is allowed to perform his or her work. It has only regulated the amount of time a driver can safely drive. By forcing companies to release drivers at the end of the driving window and not allowing them to continue on-duty work will hurt any company's competitiveness. Plus, many ready-mix concrete companies use a driver to help with additional duties at the plant. By limiting their on-duty time, FMCSA has overstepped its boundaries and responsibilities. Point 2, possibly reducing driving time from 11 to 10 hours. Safety-related incidents for truck traffic has been declining since the rule to allow 11 hours of driving time per day was adopted. J.J. Kennedy and the NRMCA, National Ready Mix Concrete Association, see no justifiable reason to reduce that number. A reduction in driving time would only cause more trucks to be on the road to deliver the same volume of concrete. Point 3, mandating a break of 30 minutes every 7 hours. Ready-mix concrete drivers spend less than 50% of their on-duty time actually driving. The other 50% is spent at the plant waiting to be dispatched, at the job site waiting to unload, unloading the concrete, and performing other duties. Companies need to have the flexibility to give breaks as the schedules dictate throughout the day. For example, a concrete delivery often takes more than 2.5 hours to complete. Concrete is a perishable product, and once a delivery is started, it must be completed, or the concrete may harden in the truck, causing thousands of dollars worth of damage and potentially violating a delivery contract. Every day is different in the construction field. Thus, companies need the flexibility to deliver concrete when the customer needs it. Often, customers order concrete on an as-soon-as-possible basis. Point 4, limiting restarts of the 60-70-hour clock to once in 7 days. Most ready-mix concrete truck drivers use the construction materials exemption of 24 hours to restart their weekly clocks. A rainy day will often stop deliveries for an entire day more than once a week. Many ready-mix concrete drivers use this 24-hour off-duty period to reset their weekly clock more than once in a 7 or 8 day period, allowing construction schedules to continue when the weather improves. The proposed changes would eliminate this much-needed and used practice. Drivers should have the flexibility to restart their weekly clock as they see fit instead of once per week. Construction schedules fluctuate, and companies need the ability to stay compliant with the regulations and still service their customers. Point 5, including at least 2 periods between midnight and 6 a.m. Many ready-mix concrete producers work exclusively at night during the hot summer months. The reduced nighttime traffic congestion and cooler temperatures are more conducive to concrete placement. By mandating a driver's off-duty time to include at least 2 consecutive periods of midnight to 6 a.m. reduces the number of hours available to meet construction and delivery schedules to an unacceptable level. Not every work day takes place during daylight hours, making this proposed change overly restrictive. And finally, point 6, limiting on-duty time to 13 hours in a driving window. NRMCA sees no justification to limit on-duty time. FMCSA should restrict its regulations to driving time as I previously mentioned. During the 16-hour window days, this would require a mandatory minimum of 3 hours of non-productive, non-paid time. This provision makes no sense for the short-haul driving industry like ready-mix concrete. Thank you for the opportunity to comment on how FMCSA's proposed hours of service regulations will affect J.J. Kennedy and the ready-mix concrete industry.
Thank you, Mr. Rader, for your testimony. I would like to introduce our final witness for the hearing, Mr. J.D. Morissette, President of Interstate Van Lines. Mr. Morissette has more than 25 years of experience in the transportation industry, working his way up the ranks at Interstate, including Vice President of Domestic Services, Vice President of Van Lines, and Manager of Van Lines Operations. The subcommittee appreciates you taking the time to speak with us today. Mr. Morissette.
Good morning, Chairman Kaufman and distinguished members of the subcommittee. I'm John Morissette, President of Interstate Van Lines, a third-generation family business located in Springfield, Virginia. Thank you for the opportunity on behalf of the 3,000 members of the American Moving and Storage Association to share our views on the proposed hours of service rules. Our industry is comprised of primarily small businesses that have been hard hit by the depressed economy and housing market collapse. Household good movers are unique, and the proposed hours of service changes will have a devastating impact on our ability to service our customers. The household goods industry differs from the general trucking industry not only in the type of cargo we carry, but also in the type of service we provide. We spend more time on residential streets than at loading docks on established freight lanes. We are an industry that prides itself on customer service, particularly our ability to take care of the customer's special and often changing needs. Our drivers typically spend a large part of their available on-duty time packing, loading, unloading, rather than driving. In addition to on-duty driving hours, our drivers enter private residences, sort, wrap, and pack shipments of personal items, load and unload their vehicles, which is a skill set that is unique to our industry, reassemble and sometimes even arrange the customer's furniture, move personal possessions and memories with the utmost care in the customer's presence, inventory each customer's items while at residence, complete the contract bill of lading directly with our customer. Our drivers must satisfy the frequent changing schedules of our customers. The proposed hours of service changes are complicated for drivers and difficult for customers to appreciate how they can affect the timing of their move. Customers' plans change. They add items, they decide to move into a unit on a higher floor, their mortgage closing gets postponed, the landlord delays the move-in date, their flight was canceled, and so on. All of these issues can force last-minute pickup and delivery changes. Also, our vehicles often transport several households in one trip, and any schedule change for one shipment affects all the others. The proposed hours of service changes will severely limit our flexibility to meet customer scheduling needs. Moves that are delayed and run over the duty time will require additional trucks and drivers to finish the move at substantial additional cost. Fewer hours to service individual shipments will mean fewer loads and reduced revenue for drivers. The hours of service rules will require multiple days to be added to complete moves at additional cost. Every business will need to increase its staffing and fleet size to compensate for the loss of hours in order to maintain service levels and customers' expectations. The capital required to add drivers and trucks would be difficult for many businesses and likely prohibitive for small businesses. Small businesses that cannot afford necessary trucks and drivers may be driven out of the industry. The health and well-being of our industry drivers are the utmost importance to us. Our industry fully supports the efforts of FMCSA to promote safety and protect driver health. However, we submit in recognition of the unique aspect of the customer service model of our industry, the proposed hours of service changes should not be applied to the interstate household goods industry, and the current rules should continue to apply. Thank you for the opportunity to testify. I look forward to answering any questions that you may have.
Thank you, Mr. Morissette. I have some, my first question, I'm going to ask the whole panel, and let's start with Mr. James and then work our way down. What provision or provisions in the proposed rule do you believe would be most difficult for your business to comply with? Why don't we just say what's the toughest one out of all the provisions that you think would affect your business in terms of complying with?
Thank you. I would say that the reduction in hours from 11 to 10 would probably impact us the greatest. Obviously, in my statement, I mentioned that every hour is critical. In the commodities that we trade, depending on what the market is doing, we're left with what market conditions dictate as far as deliveries go. And by reducing that by even 1 hour would be critical to our scheduling.
Mr. Berg.
Mr. Chairman, they're all critically important, but I would lean more towards my operation in the 34-hour restart provisions of requiring the 2 rest breaks between midnight and 6 a.m. It could dramatically impact how we're getting to our customers in timely deliveries. Let's say we load over the weekend and we need to be on site at, say, noon. But if we couldn't leave our place until 6 a.m., we might not get there until after the receiver's hours that day, or possibly even the next day. Our restraints are just as equally compounded by our shippers and receiver schedules as they are ours. Receivers and small businesses all over the country that receive the products that we haul, they have set hours of their operations, and they can't adjust their businesses to receive our goods without impacting their costs.
Mr. Rader.
I agree. There's a few of them that would be difficult to work with, but I think for our industry, the 30-minute break every 7 hours would be very cumbersome in order to try to juggle drivers' schedules and delivery schedules and that sort of thing.
Mr. Morissette.
We're also in the opinion the 34-hour reset rule would not give us the ability to service our customers without increasing fleet size, and that the 2 additional consecutive midnight 6 a.m. duty will reduce our ability to properly service the customers.
Thank you. Mr. James, specific to you, in what ways do you believe the FMCSA would take into account the differences between short-haul truckers and their long-haul counterparts?
Thank you, Chairman. Specifically to our industry, our drivers are in and out of the truck continuously throughout the day. We are not driving long, monotonous stretches of highway where fatigue really does become an issue. They may drive for an hour, get out of the truck for an hour, 45 minutes as they're dropping product. There's plenty of wait time when they're sitting at a terminal, and so consequently, they physical drive time might be half of their actual on-duty time. So I really believe that would impact us.
And Mr. Berg, given the limited pool of qualified drivers, how will your company be able to meet transportation demands safely should the proposed rule go into effect?
Ideally, we would have to change the driver lifestyle significantly, and that would increase the amount of home time. The issue that I have with my company isn't getting qualified drivers to perform the task. It's qualified drivers that will sign up to the lifestyle of trucking. So that would need to change, so I could go outside of the typical trucking ideal candidate and move to more acceptable home every night operations. So that would dramatically increase our cost to do so, because we'd have to shape runs, we'd have to have increased possibly trailer pools where we'd have regional locations and trailers would be dropped and interchanged, possibly with other carriers. Anything can be done with the right financial incentives. But I think that's the challenge that we have with this regulation, that it doesn't take into account the full value of the proposed rules, and it does not increase the safety element like the rules are supposed to.
Thank you, Mr. Berg. Mr. Rader, you stated that the current HOS regulations are not perfect, the proposed rule notwithstanding. How do you believe the current regulations could be improved?
Well, the the ability to lumping us in with a long-haul trucking fleet, as we've all discussed, the short-haul truckers it's a different animal. It's a different type of vehicle. The drivers are getting home every day. The fatigue is really not an issue. And I would say that I'm sorry, I lost my train of thought there. Could you ask the question again one more time?
Sure. We talked about current regulations, current HOS regulations, and how, if you were going to come up with a proposal to better reform current regulations without the new regulations, what would that reform be?
I would say we would leave things as they are. To make the changes they're not necessary at this point.
Okay. Great. Thank you very much, Mr. Rader. Mr. Morissette, since your industry does not generally deliver to and from the same addresses, would the proposed rules make it more difficult for movers to operate?
Significantly. Our drivers don't spend as much on-duty time as other drivers because they're in the house, even supervising an entire crew that's in there. So the household industry is uniquely different in that respect. And so in some ways we don't feel that the hours of service as proposed really should apply to the household goods industry.
Thank you, Mr. Morissette. Mr. Altmeyer, Ranking Member.
Mr. Rader, you spoke in your testimony about the shift from the current rules and the proposal that would then prohibit drivers from performing non-driving work beyond the 14-hour driving window. And I wonder if you could expand a little bit on how this would affect a business like yours that usually requires drivers to perform extra duties, such as loading and unloading, after reaching their final destination.
Yes, the drivers will tend to do a lot of other things around the plant. There's things that need cleaned up. We have some drivers that wear different hats. We have a fuel business that, in addition to our ready mix, so we might have a guy go pump some fuel for filling our trucks. Block truck drivers who pick up some extra deliveries. Something we try to keep the drivers productive and keep the business moving.
Okay, thank you. I wanted to ask the full panel a question. We'll start with Mr. James and then work to your right. Due to the reduction in allowed driving time under the proposed rule, companies are going to have to put more trucks on the road to meet demand, as we've discussed. And we in this committee, and certainly you understand, that access to capital is still difficult for small firms to obtain across the country. So I was wondering if you have a concern that your company might not have the ability to purchase more trucks or hire more drivers to remain competitive under these rules.
Yes, obviously credit is extremely difficult to obtain in today's marketplace. I'm not sure that the issue of actually buying more trucks is what we're talking about here, or mainly having to hire additional drivers to fill the trucks, I guess, that maybe you're referring to. We do a pretty good job of trying to maximize the rolling assets that we currently have. By bringing on additional trucks to move the exact same amount of product doesn't seem very efficient in my world. Just because we add another truck doesn't necessarily mean we're going to have more business. So I think I would defer more to trying to maximize and be as efficient with the staff and the equipment that we do have in order to run our business as best we can.
Mr. Berg?
Prior to the recession, and I want to speak to the local owner-operator, the 85% of the truck carriers that operate 5 trucks or less, they could walk into a dealership, get 95% financing, get a 7-year term at 6% interest to finance that capital. That 5% down is now 30% down. That 7-year term is now 48 months. The 6% interest is now 8 or 9% interest. And that's the same qualified individual. And those are real-life scenarios that are going on now. Currently, I find myself in a situation where we're a financially viable company and we're still having challenges. Now, granted, that's overlapping to how we got into the recession, financial issues, and the like. But for the next 3 to 5 years, I would expect that that is going to continue, that there will be larger amounts of capital requirements because banks will have to hold that back, and therefore it'll feed downstream to the small operators. So I see that being a big challenge for us. And I think available capital is going to be equal to finding the drivers that are willing to do the jobs that we need done.
Thank you. Mr. Rader?
I would agree that credit is very tight right now. It's difficult as far as to Mr. James's point about buying more trucks. And in our industry, with the downturn, we've had to park some vehicles, and there's probably some trucks out there that could be put back on the road at minimal cost, but the issue does come with putting the qualified drivers into the seats to make that happen.
Mr. Morissette?
The household industry is somewhat unique and utilizes subcontractors, so we're small businesses that employ small businesses. The economic situation has probably hurt them worse than the companies themselves, and their ability to get financing and then having the down payment on the trucks has been very difficult, so they're into an aging fleet. So we definitely see the challenges from an economic standpoint, both for companies and our individual subcontractors to get equipment.
Thank you. Thank you, Mr. Chairman.
Thank you, Mr. Altmeyer. Mr. West?
Thank you, Mr. Chairman, and happy Flag Day and happy Army birthday to each and every one of you. First question is, I think, starting at the beginning. Obviously, it seems that the FMCSA did not do any type of consultation with any of you that are out there in the industry. So what do you think drove this unilateral decision that they made? And that's a question for all the panel.
Representative West, it's a good question. Sometimes it seems that people look at rules and regulations and see how they can tweak them in order to attempt to make things safer without having all the facts. Sometimes numbers can be put in a position to justify their own agenda, and I think that the facts that have been presented don't necessarily tell the entire truth.
Okay.
Representative West, with all due respect to the FMCSA, who I hold in the highest esteem, Ann Farrow is a great person. I can't see a common rationale that would fit into what FMCSA historic message has been to, and that's to improve safety. Excuse me, with all due respect to the panel, outside of the Beltway, we call this politics. Because that's what it seems to be. There seems to be other motives for why these rules would be restrictive to the small businesses and trucking companies that would be affected of these rules. That would be my personal conclusion.
What then would you think, to you, what would the motive be then?
Who would benefit from having a more restrictive workforce? You could say that there would be more trucks on the road, therefore there could be more manufacturing needed to have the more. You could have an increase in people, so therefore driver or employment base would have to increase to accomplish that. You could look through, and I've done that personally, try to find out, understand what the reasons are. You know, trucking is the most overregulated yet under-enforced industry that I'm aware of. Their current rules suggest that companies that operate within those rules have a less crash statistics. So I'd suggest that the administration focus more on improving the current rules or enforcement of the rules than to modify out from those.
So political gamesmanship.
Yes, sir.
I would agree with their points. The issues of safety is what this all, I would think, is what it's based on, and the statistics are showing that the number of incidents are declining, not increasing. So I don't understand why they need to make the change either.
We agree with Mr. Berg in that there are plenty of regulations out there currently that aren't being enforced, and there's lack of enforcement that goes out there. I think in general the trucking industry has made great strides in safety, as the data will support, and especially in the household goods industry, I think that we have a phenomenal safety rating. And you know, we concentrate on that, we focus on that, and we focus on customer service. So we don't understand the reasons for the additional regulatory.
Okay. And follow up, Mr. Morissette, you know, having spent 22 years in the Army, your industry was very integral in my moving back and forth all over the country. So I would like to ask, you know, when you look at this this new rule, how would that affect, such thing as military PCS moving?
It's interesting because June is our peak season.
Absolutely.
Movement of personal property follows school calendars. And so there's a excessive demand for a limited supply, especially during the summer months. Additional rules that limit our ability to service the customers. And we're challenged currently to handle the volume load of the DOD. We are primarily a DOD transportation provider, and very proud to do that. So that only presents additional challenges for us that we have.
Thank you, gentlemen. I yield back.
Thank you, Mr. Tipton.
Thank you, Mr. Chairman, and thank you, panel, for joining us here today. I'd like to go back a little bit, Mr. Morissette, and I think Mr. James as well. You talked about if these rules go into effect, the possibility of increasing your fleet size. And this is going to be a cost that's going to have to be passed on to the consumer, isn't it?
Yes, absolutely. I just purchased a truck this past year, and it was $140,000 for a 2011 Kenworth. Obviously, I have to pay for that, and doesn't mean just by buying another truck does not necessarily mean that I'm going to have additional business. I obviously try to have the safest trucks on the road, and so we continually upgrade our fleet as time and equipment are needed.
And Mr. James, this just seems to me to reek of taxation by regulation.
I would agree with that.
We're consistently seeing new regulations come into play. The consumer ultimately now is carrying the burden of this. And these are at times when we have people that are just struggling to be able to pay the mortgage, let alone just respond to bureaucratic mandates that are coming down. Tell me a little bit about the truck safety that we're seeing. Have we seen an increase in accidents?
No, sir, we have not. Since the last regulations were put into place in 2003, I think through several of the other testimonies, it was mentioned that driver fatalities and accidents have actually decreased over time.
So we've got a safe industry, and we're trying to regulate it more.
That sounds pretty accurate to me.
It sounds pretty accurate. Tell me, Mr. James, in your testimony, you stated that it's not uncommon for drivers to experience unexpected delays at petroleum terminal facilities. Does that count towards their time, driving time?
Absolutely, it does.
Does that make sense to you?
As far as just sitting in the cab?
Yeah, in terms of we're going to go ahead and give a break when they're already sitting there waiting at the terminal.
That is correct, and that's actually in my fourth point.
Right.
I suggested that for petroleum transporters, we be allowed to count up to 3 hours additional waiting time as off-duty time. That would allow our drivers to count the time that they're sitting and basically just resting, if you will, to count as off-duty so that we can maximize those deliveries, so that we don't have to put on unneeded equipment and or people unnecessarily.
Absolutely. Gentlemen, this might be for the whole panel. We've heard a lot of regulations coming through, particularly in this Congress, and we're trying to do some good oversight. Public opinion, comments are always taken in before regulations are coming out. Do you hear your voice being heard? Are the regulators really listening?
I would say in my case, you've given us ample opportunity to express our concerns, and we certainly appreciate that. So we thank you.
Yep. Gentlemen?
Likewise, having the opportunity is the first step. How we act, or I'm sorry, how this body acts on our requests. I guess you could, if you have an ailment, you could ask your surgeon or your healthcare provider for the best resolve. And I appreciate the offer of being here today to give us the opportunity to say what's really happening, what our true life experiences are, because this is over and unnecessary regulation that we feel is upon us.
Thank you.
I would agree with the opportunity here today, and we've made requests to our congressman, and he's been obliging, and I think we are being heard. I think it is starting to change.
Great.
We definitely appreciate the opportunity to speak before the subcommittee. In addition, FMCSA has given us good access to provide information to them. I think the end result what we see in as far as regulation will determine whether they hurt us or not.
Great. Well, gentlemen, I appreciate you taking the time to be here. You know, it just seems to me that you're facing a lot of challenges. Credit's a challenge for you to be able to get out and do it. The services that you provide, that quality is at a premium, and you're doing your very best to be able to deliver a quality service at the lowest available price. And you know, applaud your efforts and your willingness to be able to come in, because this is part of the role when we're talking about creating jobs in America and keeping people employed in America right now. This is absolutely fundamental, and appreciate your insights. Thank you.
Mr. Hanna? Very well. I would like to thank all of our witnesses once again for testifying before our subcommittee. You have given our members a better perspective on how the proposed rule on hours of service for trucks has the potential to damage a significant number of American small businesses. It is disturbing to me that under the guise of public safety, the Federal Motor Carrier Safety Administration has used outdated data to support their hours of service proposal, discounting the fact that we are currently experiencing the safest record on truck-related fatalities and injuries in recorded history. Regulating for the sake of regulating will cease unintended economic consequences, will create unintended economic consequences, especially in the case of hours of service. I encourage FMCSA to take into consideration the implications of their proposed rule before solidifying their position in the coming months. I ask unanimous consent that members have 5 legislative days to submit statements and support materials for the record. Without objection, so ordered. This hearing is now adjourned. Thank you again for coming and testifying. Yeah, sure. To the office. Okay.